Financial markets are locked in a tense high-stakes holding pattern. On the NZX, standard retail stocks are experiencing a strange artificial calm. But underneath the surface, a select few corporate giants are staging massive, unexpected breakaways. Meanwhile, retail banks are quietly tweaking their numbers. They are sending a very clear message to everyday Kiwi savers. For weeks, investors have been starved for a clear direction. With core retail mortgage rates completely frozen over the last 24 hours, the local housing market isn't offering any momentum. The NZX 50 have been forced to look inward for growth. They are leaning heavily on corporate restructuring and domestic infrastructure plays to keep the index afloat. This has created a deeply fragmented stock market where generally stability hides extreme individual volatility. Let's break down the winners and losers on the board. The NZX 50 finished a relatively flat but stable week, sitting up about 3.5%. Over the last month, the big story, SkyCity Entertainment, they saw a massive explosive 11% jump on Tuesday alone. That led to gainers alongside heavy hitters Channel Infrastructure and Contact Energy. But it wasn't clean sweep. Market heavyweights Spark and Abos both pulled back significantly, and for everyday savers, Finance Direct just trimmed its 1 to 3 year term deposit rates, signaling that a peak of a passive investment returns may already be behind us. Market commentators are looking at this flat index with a deep skepticism. They argue that a market propped up by a few isolated corporate jumps like SkyCity is masking an incredibly weak consumer economy. Retail investment advisors are warning that clients that term deposit rates are beginning to slide before mortgage relief has actually arrived. This threatens to lock conservative savers out of high yield while inflation continues to erode the purchasing power. With mortgage rates stuck in place and term deposits starting to trim, the options for growing your money are tightening up fast. Corporate earnings over the next month will decide if the 3.5% market gain is sustainable. Are you keeping your money in the bank, or are you looking to riskier markets like NZX to beat inflation? Let me know your strategy in the comments below and let's talk about it.